Okay, so now we're going to begin the anti-dilution portion of the course, and this can get a little tedious and get a little confusing, but try and follow along. We're going to do it one step at a time, and we'll move on from there. So the first thing we're going to do for the anti-dilution portion of the course is to figure out how things look with no dilution provisions whatsoever, and then work from there into full ratchet and then into weighted average. So we'll start here. So I'm just going to do a little bit of formatting up here. Follow along. Maybe I'll zoom in a little bit to make it easier for you to see here. Looks good. Okay. So just going to start at the top, no dilution provisions whatsoever. And then I'm going to do series seed round, and I'm going to copy and paste some labels in so you don't have to watch me type them, and you can pause and type them out for yourself. So that's how these look. I'm going to format those over. Okay, and so the first thing we need to figure out is percent of company owned. But percent of company owned, I don't want to reference the cap table here. I want to actually figure that out from my calculations on this sheet. So that will actually be one of the last things we figure out, and that's a factor of total share count. So the amount invested, that's something we do reference the cap table for, and in the series seed, the amount invested was this $1.232 million right there. So we're going to reference that one, and then we're going to reference the share price on the cap table as well. So the share price on the cap table is 571. And then shares issued is something else we're going to reference to the cap table. So we could say shares issued is 1.232 divided by 571, and that's 215,000 shares. However, if we reference the cap table number, it's 226,000 shares. The difference is the discount on the convertible note. So for this series seed round, since I know we have a convertible note converting in this round, I'm going to reference the cap table and not do the calculation right here. So I'm just going to move that over, and we know the shares issued. Now if this was the Series A round, we'll do it a little bit different, and you'll see how we do it whenever we get down to that one. The value is the shares issued times the share price. So 1.290. So that's about what converted, if I'm not mistaken. It's about how much converted into actual actual shares. And then the post-money value. So the post-money value is also a factor of the percent of company owned, so we'll calculate that in a minute as well. So we know the founders' shares issued, and this is the Series Seed round, like I mentioned, this is kind of from the beginning. The founders' shares issued are what they got to begin with. So that's that $1 million right there. And the options issued in the Series Seed round is easy to figure out too, because we calculated that right here on row 23. We can just reference the total shares right there, 216,358. And then let's reference the share price for the Series Seed again. And then we can do value. So the value would be the total shares issued to the founders plus the options, so the sum of those two, times the share price. That's 69.42. So that's about the pre-money value. It's equivalent to the pre-money value in this scenario. The factors are a little bit different. Like I said, that convertible note throws things off a little bit. But these are going to be actual numbers, so effective numbers, whereas the cap table, the share price calculations, they do a little bit of rounding, and they don't get things the effective amount. Those are kind of like the high level amounts used for calculating the share price. And then once you kind of dive in, then this shows you what the effective numbers are going to be as far as valuations, ownership percentages, etc. Okay, and so now we're going to do the pre-money valuation, and this is the pre-money valuation that the founders are going to get whenever they get their shares issued to them, whenever you take the options that the Series Seed investors are requiring them to take out pre-money whenever you factor those shares issued in, the effective pre-money valuation for the founders is going to be this number. So that is the share price times shares issued, right? So that's going to be the basically the pre-money valuation the founders received. These are not really important numbers. The important numbers, you'll see what the important numbers are here in a second. So then we can do percent of company owned. Percent of company owned is going to be 1 minus this. So the series seed owns this amount. The founders own this amount. Of course, as of right now, the founders own it all because we haven't input a number or calculated the number for percent owned by the series seed. Okay, so now it just takes a couple more calculations to figure out these other things. And so we want to do total shares as if converted. And so that's going to be the shares issued to the series seed plus the founders shares plus the option shares. And then the market cap is just total shares as if converted times the share price. And if you notice, this 8.232 million is the exact same post-money valuation from the series seed round. So that lines up. Then the percent of the company owned is going to be the shares issued to the series seed divided by the total shares as if converted. So that's 16%. It's actually a little bit less than 16%. And we can see the founders own 84.33%. And then the post-money valuation is going to be the amount invested divided by percent of company owned. So here's where it tells you a little bit more information than what you get from the previous page. If you just invested the 1.232 million into the post-money valuation that we have on the cap table of 8.232 million, you get 14.97%. But with the convertible note, we had interest and a discount that factored in, and that actually gave us more shares than we would have gotten had we just invested the 1.232. So we can show that by here. The 1.232 million divided by the 5.71 is 215,000, like I mentioned earlier. We actually issued 226,000 shares. So that's the difference between these two numbers. The discount from the convertible note made us issue more shares than as if we just took the amount invested and divided it by the share price. So that makes the effective post-money valuation 7.861, whereas on paper the post-money valuation was 8.232. So that's just a little bit of difference that you can see from these calculations, and how the convertible note will actually affect things and make the post-money valuation be lower than what it appears on paper. So next we'll do the Series A and how that goes through and how dilution occurs with no dilution provisions whatsoever.